Hey, welcome back. It's JWalter here. In today's video, I'm going to share an update from Corelogic. They just announced a new housing market forecast for 2022. So in today's video, I'm going to be sharing the revised forecast for the next 12 months. So that is the topic of today's video. And by the way, if you're looking for a real estate agent referral from virtually anywhere in the US, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. And with that said, let's begin today's video. So this is according to Corelogic. They just announced this on March 1st of this year. They have what's called a Corelogic Home Price Insight, or the HPI. And this is published on a monthly basis, and I report this to you guys so you can be more informed about what's really going on in the housing market and to also gain some insights about what they expect in the next 12 months. And by the way, I'm going to give you an update regarding housing inventory and mortgage rates because we've seen some pretty big changes, especially regarding mortgage rates, because those have been decreasing greatly over the past couple of days. So Corelogic said that home prices nationwide increased 19.1% in January of 2022 compared to January 2021. On a month-to-month basis, home prices increased 1.4% compared to the previous month. And their forecast is calling for a 3.8% increase from January 2022 to January 2023. And this forecast is actually more bullish than their previous forecast because their previous forecast called for a 3.5% increase in home prices over the next 12 months. And by the way, this number here is in line with Realtor.com and Redfin as well. But Zillow, I believe this number is around 17%. They believe that home prices are going to increase by double digits this year. And they are far more bullish than all these other companies are. So Corelogic went on to say the following: consumers looking to purchase a home have remained optimistic moving into the next year. I don't really know too many home buyers who are really optimistic. Most people I hear who I personally help on buying a house, and also for those of you who comment on the channel, you're really pessimistic about the housing market because there's a lack of houses for sale. In any case, they say that they are expecting it's going to be more optimistic in the next 6 months as rapid home price appreciation is forecasted to slow. Despite market and economic challenges such as low inventory, I'll talk more about that here in a little bit, continued buyer competition, and declining affordability, potential buyers are ready to move while mortgage rates remain relatively, key word there, relatively low. So let's talk first about housing inventory. I really like Redfin's website when it comes to housing inventory. And when you think of housing inventory, you think of, I had this analogy in my previous video where you think of a bathtub. And when that bathtub is basically the number of houses for sale, housing supply, housing inventory, all those terms remain the same. In any case, when you have housing inventory, the way to increase it is to have more new listings, more people to list their houses for sale. And when housing inventory gets depleted or decreases, you think of that as a drain in the bathtub. And that's when a home seller accepts an offer from a home buyer. And of course, when a house actually sells. So one of those key pieces is new listings. So here's Redfin's data regarding this. I have 2022, which is in black, and then also have 2017 through 2019. So compared to this year, compared to the last few years in 2017 to 2019, the number of new listings is less than those years. When you look at 2020 and 2021 as well, let's just look at all the years, in fact, actually. Still at low levels compared to the past 5 years here. I really don't like to look at 2021 and 2020 though, because those years, obviously the housing market was on steroids. And I think it's better to have a more long-term view in order to gain what's really going on with the housing market and to see whether or not now is very similar to prior years. In any case, the number of new listings is down 1.7% compared to 2021 at this time, but the number of new listings is still far less compared to pre-COVID levels. In addition, when we look at how fast houses are selling, this is called days on the market. That's when a home seller lists their house for sale and when they ultimately accept an offer from a home buyer. That's days on the market. So the median days on the market right now, as of the end date of February 20th of this year, is 28 days compared to 2018, 59 days, 2019, 62 days, and in 2017, around 65 days. So from 2018 to 2022, just 3 years, or 4 years, I should say, we went from About 60 days it took to sell a house to only 28 days. So that drain is getting bigger, and it's further causing housing inventory to decrease. In addition, have a look at this. Here's a look at active listings, which is of course housing inventory. This black line again is 2022. So for the 4 weeks ending on February 20th, 2022, we only had 452,000 houses for sale. Compared that to 2018, we had around 924,000. And in 2019, around just under a million. And then 2017, also just under 1 million houses for sale compared to 452,000 in 2022. And this is why when a home gets listed for sale, often it sells for over the asking price and it sells very quickly. And of course, this is a big issue. So in regards to mortgage rates, I want to share an update for you guys regarding this because this could have some pretty big impacts on our housing market. So for the 10-year US Treasury note, and by the way, the yield on the 10-year US Treasury note is tied loosely to mortgage rates. So when the yield decreases, so can mortgage rates. And of course, vice versa, when the yield increases, mortgage rates can increase as well. So have a look at this. Right now, the yield, and this is on the 2nd of March today at the time of this video, the yield is just under 1.9%. And take a look at this because when Russia invaded the Ukraine, the 10-year US Treasury yield, or the yield on it, has been decreasing, and that has caused mortgage rates to decrease. So have a look at this. I believe that Russia invaded Ukraine around the 24th of February. And have a look at this. During that time period, the yield on the 10-year US Treasury note declined greatly. So they went from just under 2%, actually we're at 2%, almost 2% on the 23rd, and we dropped from that to about 1.7% in the span of just a few days. But what's happened recently is that the yield has been increasing. So have a look at this. This is the average 30-year fixed rate mortgage according to the Mortgage News Daily. I talk about this all the time. Mortgage rates hit almost all-time record lows around the 3rd of August of last year, 2.78%. They have increased greatly, especially this year. At the beginning of this year, we were around 3.27%, and they spiked all the way up to 4.19% on February 23rd of this year. But when we look at rates over the past 7 days, have a look at this. And remember, the yield has decreased ever since really the 24th of February, So the 24th of February is when rates decreased, or the yield decreased greatly. And have a look at this. That's also when mortgage rates dropped greatly as well. They went from 4.18% on the 25th of February all the way down to 3.90% on the 1st of March. And I want to get back to this Corelogic report, but I also want to share this news as well because rates went from 3.9% on the 1st of March, and now they're at 4.02%. So they increased 12 basis points today at the time of this video. And this is because Jerome Powell, who's the Fed chair, announced that they were going to be increasing the federal funds rate, which again is also tied loosely, very loosely to mortgage rates. He said a series of 0.25 percentage point increases are coming, though he left the door wide open for the possibility of moving more aggressively should inflation persist. He said the implications for the U.S. economy are highly uncertain, and we will be monitoring the situation closely. The near-term effects of the U.S. economy on the invasion of Ukraine, the ongoing war, the sanctions, and the events to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. It goes on to say in this report here, later he said the Fed wants to get inflation under control, but the bottom line is that we will proceed carefully as we learn more about the implications of the Ukraine war on the economy. And meanwhile, the inflation is at 40-year highs. So in other words, this crisis in Ukraine could cause mortgage rates to decrease, but I'll definitely keep you posted regarding that. All right, so going back to this report from Corelogic, they said that there were no states that posted an annual decline in home prices. So every state in the U.S. Increased compared to January of 2021. The states with the highest increases year over year were Arizona, 28.3%. And by the way, the average price appreciation in the US is in the range of 3 to 5%. So not 28.3%, that's highly unusual. Also, Florida with 28% and Utah also with 25%. And here are the top 10 states that had the highest price changes compared to 1 year ago. You can see here Tennessee, North Carolina, South Carolina, Montana, Idaho, 21.3%, and Washington, 21.2%. And here are the top 10 metros in the US that had the biggest increases in home prices compared to 1 year ago. San Diego, 23.3%. A lot of you ask about San Diego. Los Angeles, 14.5%. But look at that. That's half the increase in Phoenix. 30.2% increase in 1 year. Las Vegas, 25.2%. Meanwhile, the East Coast, especially Boston, Washington, D.C., Chicago, were at levels far less than these other cities here. Miami also with an 18.7% increase. In contrast, according to Corelogic, here are the top markets at risk of home prices decreasing in the next 12 months. And these cities here haven't really changed compared to the last forecast, by the way. Anyways, number one is going to be Lake Havasu City, which is in Arizona. The level of risk of prices declining there is very high, and their confidence score is 50 to 75%. Prescott, Arizona is second place, Bridgeport, Connecticut, Silverdale, Washington, and then also Hartford, Connecticut, rounding out the top 5 metros. So that's Corelogic's housing market forecast for 2022. What do you think is going to happen this year? Comment below. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. Hope you have an awesome day. I look forward to seeing you on the next video.